Ask any member of parliament and they'll all tell you that the government has to tax to get money to spend, and what doesn't get in taxes, it has to borrow from the likes of China and leave debt to our grandchildren. Let me repeat, ask any member of parliament and they'll all tell you the government has to tax to get money to spend, and what doesn't get in taxes, it has to borrow from China and leave debt to our grandchildren. At what point do we run out of money? First, let's look at what happens when you pay your taxes with cash. They take your old $20 notes, they give you a receipt, and then they throw your hard-earned dollars in the shredder. So how does taking your cash away from you and then shredding it pay for anything? If they need your dollars to be able to spend like they all say they do, why are they throwing them away? The same thing happens when the government borrows. If you buy different bonds with actual cash, you give them the cash, they give you the bonds, and then they send that cash to the shredder. So what's going on? Why are they borrowing your dollars, paying you interest, and then throwing it away? What sense does that make? Who would do that? If someone buys something from you and pays you in cash, do you throw that cash away? Of course not. Clearly, the government is not anything like a business or household when it comes to finance. Clearly, the government does not need your dollars to be able to spend, and clearly something else is going on here. How does the government spend? Let's look at what happens when you get a Centrelink pension payment with online banking. If you can see it happen, let's say you already have $3,000 in your account. When the $1,000 payment hits your account, your balance changes to $4,000. Watch again, you now have $4,000 in your account. So what did the government do? Did they hammer out gold coins or dump a pile of money into your computer? No, they just changed the numbers. That's how it works. As former Reserve Bank of Australia Governor Ian Macfarlane explained, the spending comes first. A lot of people are surprised when they hear that. That has always been the case. The government, i.e. the central bank, has to transfer the dollars to the bank of whoever the spending is intended for. In other words, government spending isn't reliant on tax revenue. The dollars must first be transferred to the recipient's bank account, and taxes are collected after that spending has already occurred. Today, that's where all dollars come from. Numbers are simply marked up by computers. So how can the government ever run out of Australian dollars? At what point do we run out of money? More precisely, what happens is that your bank has an account at the RBA, just like you have an account at your bank. And when the payment is made, the RBA simply changes the number in your bank's account, and your bank changes the number in your account. And what about taxing? When you pay your taxes from your bank account, all the government does is change the number in your transaction account to a smaller number. If you have $4,000 in your account and then send $1,000 to the government, the $4,000 in your account gets changed to $3,000. The government doesn't actually get anything. They just change your number to a lower number. They change numbers up and down all day, and the difference between the spending and the taxing is accounted for as a deficit or surplus only after it's happened. The point here is the person at the Treasury making the payments by changing numbers up doesn't get anything from the taxman who's changing numbers down. In other words, the government doesn't need to collect taxes to be able to spend when the guy making the payments doesn't even have the phone number or email of the guy doing the taxing. We know the government doesn't need money to spend, so why does it tax? Governments exist to provide public services like the military, healthcare, and transportation networks. And this means the government has to provision itself by transferring goods and services from private to public domain. Today, this is done with a monetary system. It works like this. It begins with the tax levied by the government payable only in its own currency, such as the dollar. Think of a property tax, for example, where everyone with the house has to pay a tax or lose their property. This creates sellers of goods and services seeking dollars in exchange. Now, the people who the tax caused to be unemployed can be hired by the government and paid with as otherwise worthless dollars for their work. For a historical example, let's look at what happened in the 1800s during Britain's colonization of Africa and Ghana. Britain wanting to grow coffee. However, the local population had no desire to work for the British government, so the British imposed the hut tax, a tax on everyone's house payable only with British script. And if the tax wasn't paid, that British burned their houses down. The tax immediately caused what we call unemployment, people looking for paid work, and the British then hired them to work in the coffee fields. Lessons from Ghana. Lesson 1. The British spent their script before collecting taxes, making it clear they paid workers first. This same sequence occurs in Australia today. Government spending precedes taxation. Lesson 2. The British always spent more than they taxed, running deficits. This left people with excess script that hadn't yet been taxed, expanding money supply and savings. Deficits similarly add to Australia's money supply today. Lesson 3. The value of script was based on the work required to earn it from the British. For example, 1 coin per day's labor meant 1 coin, thus 1 day's work. So what does that mean? Assuming the only way to get script from the British is to grow coffee, some people would have to get script through other means. For example, if a chef wanted to get script, he'd have to get script from someone else who would be willing to work for the British growing coffee by selling him food in exchange for the extra money that the person earns for growing coffee. They come to a mutual agreement about the price, which today we call market forces, prices where buyers and sellers come together. However, if the British started paying 2 coins for each day of work, the coin would then be worth half as much. If you recall, the food that the chef was exchanging was originally worth a day's work. Since you can now earn 2 coins for a day's work, the price of the same amount of food would go up to 2 coins. The same is true in Australia today. Whether the government knows it or not, the value of the dollar is based on the prices the government pays when it spends. For unemployment under the British, there was no unemployment in Ghana. The British imposed a tax that created unemployment, but then it hired those people to work in the coffee fields. What if the tax caused more people wanting that to work than the British wanted to hire? No problem. The British could either hire them or reduce the hut tax, which reduced the amount of time that people needed to work for the British. And the same is true today. Australian tax liabilities create unemployment, which allows the government to hire the people it needs in exchange for the Australian dollar. Therefore, today's unemployment is the evidence that the government's tax liabilities created more unemployed than the government has hired. The solution is obvious. The government can either hire the people that have made unemployed, or they can lower the tax so these people can go back to the private sector where they came from. However, there's one additional consideration. Private sector businesses don't like to hire people who are unemployed. They prefer to hire people already working to promote the transition from unemployment to private sector employment. The government can offer a transition job to anybody willing and able to work, and this has become popularized as the job guarantee.